Hey, happy Monday, everybody. Hope you had a great weekend. This is your market update for January 23rd. So, stock market this morning, futures indicated that the markets were going to open relatively flat, maybe just slightly positive. And in fact, that's exactly what happened. But since then, the markets have rallied. Currently, the Dow is up over 200 points. NASDAQ and S&P 500 both up on the day as well. But I think the primary reason for that is there's been some talks, some reports, surveys, and things like that have come out where businesses are now anticipating that there's going to be less likelihood of a significant recession. Of course, the market's like that because the stock market doesn't like recession. And then also, I mean, you can see that, inflation numbers continue to support that inflation is coming down. So the Fed's rate hikes are having their desired effect, even though the job market remains resilient and strong. I think the inflation numbers are taking a bit of precedence over that. The market likes that, again, especially the stock market. So we kind of wait and see, how that transpires moving forward. I think that people are now anticipating that the Fed may be a bit less aggressive moving forward. Again, that's yet to be seen. I think we'll find out more at the culmination of their next meeting, which happens at the end of this month, rolling over into the 1st of February. Mortgage-backed securities on the day started the day down 19 basis points, are currently down only 14 basis points. So down on the day, they ended the day down on Friday as well. But a very modest decrease. It hasn't had too substantial of an impact on mortgage rates. Mortgage rates still, especially looking at where they were, 9-10 weeks ago, are certainly significantly better, which is great. So we'll continue to keep you updated. The big hitter this week, in addition to some corporate earnings reports, is going to be the PCE report that comes out on Friday, which is the Personal Consumer Expenditures Report, which is a key measure of inflation that the Federal Reserve likes to look at strongly, especially if it comes out before their meeting, which it is, in fact, going to do that. So that could have, a strong, rather significant impact on what the Fed decides to do moving forward. At this point in time, I think the market's priced in like a 99.7% chance that the Fed is going to increase the Fed funds rate by 0.25% or 25 basis points at the next meeting. If for any reason they decide to increase more than that, the market will likely react negatively, both stocks and mortgage-backed securities in the bond market. But again, with a 99.7% chance that is likely what's going to happen, I'm going to say that's likely what's going to happen. So again, we'll wait and see. My crystal ball broke a long time ago, but that's kind of what the markets are dictating at this point in time. Hope you all have a great afternoon, and I will see you tomorrow morning. Thanks so much.